Good evening, ladies and gentlemen. Welcome back to Walk the Block. We are navigating digital finance all together. Gosh, what a week to be navigating. We've had a good bit of news coming out, which is exciting to see, but we've also seen a good bit of what's going on with the markets. We talked about it last week. We saw a bit of a crash there, but it looks like things have recovered and are looking towards the upside potentially. We're going to be pulling up what the market's saying on that one, where people have their bets in particular. We did just have a lot of liquidity in the options contract trading market get just absolutely demolished about 3-4 weeks ago at this point. We want to see how they've recovered and see where people are putting their bets. To give you the analogy, we were playing craps for a long time. Somebody rolled a 7. The table got wiped. So now we want to see where the chips are going now. And we'll be talking about that. Outside of that, yes, the government is looking to reopen, not officially open yet, but the now record-setting government shutdown appears to be coming to an end. We'll be talking about what you can expect out of that and why or why not we might be back in the same spot we are at the end of January, but we'll only have to see when we get there. And outside of that, we are also going to briefly mention it. But yes, there was an idea floated that, hey, stimulus checks could be coming out in the near future. Donald Trump floated the idea of $2,000 stimulus checks due to all the great money coming in from the tariffs. But that's only part of the greater pie that we're trying to show that's going on here. And yes, it does ultimately all factor back into the Federal Reserve and what they're doing with the money supply. So surprise, we're back to the old bread and butter on that one a bit. But anyways, it's a pleasure to see you guys all out there tonight. By the way, it's an absolute pleasure to see our good friend Moonpilled Rational Optics. He says first in line. Yes, sir, you are. Always a pleasure having you. If you have any questions or comments that you would like for during the stream, please throw them in the chat. We'll be happy to answer and riff and talk about anything you want to talk about, because there's a lot to, but also a lot of it actually ties back together. Anyways, folks, I'm your host, Zenith, and I'm joined by my excellent co-host today, Tracker. How you doing, buddy?
Doing well, Zenith. Doing well. But people were starting to freak out pretty good on the other day on the 3rd and the 4th when the pullbacks were happening a little deeply. Wasn't isolated to one central exchange, but a lot of the heavy longs that were wiped out and stuff were happening mainly on Hyperliquid, Bybit, Binance, HTX. I've never really been on that one, but those were where the most of the central exchanges were, where destruction was had on those 2 days. But so mainly across those essential exchanges where most stuff was happening. But yeah, anyhow, I'm doing well, man. Just following the market, seeing what's going on. I know a lot of moving pieces are happening. I know we're going to dive into a lot of stuff. I did catch you guys last night on DJ Roundtable. Some pretty good talking points. I'd like to elaborate on a few of those items you guys were talking about, because I think there is
absolutely
definitely some good stuff to talk about that you guys were discussing yesterday. It was a good conversation between all of y'all. It's good to see you guys all on there. I think it was Will, Dace, yourself, and Jay was on there, so it was a good conversation. Anybody who didn't see it, I recommend you go and checking it out. It's good.
It was a fun one for sure. It's always a pleasure having Jay hop on the DRT streams there. And then having Dace on was also fun as well. He had to dip out a little bit early, so we didn't get him the entire time. But overall, it was still an absolute blast. And I mean, Will's also a hoot, and we love that guy. So why not, right?
Absolutely, man. I love him in the he's always, it's funny, there's a little bit of back and forth going on with some of the people in the one of the meme channels, which is pretty funny. So I was just glancing over it because I was like, I just want to check out the silly memes. I'm there for the sugar candy at this point, for the brain, because I just want to turn off. I just can't sometimes. That's the reason why we have that, just a place to go. We seem to have a channel over in DGen Roundtable and other just to kind of, it's whether you want to talk about politics with some people, you want to talk about music, you want to talk about just memes, just to get a good laugh, get on with your day. There's a reason behind all of those. It's because we all go through different trends of the day. So no need to get so wound too deep. And there is a balance of life here. Can't be tied up in crypto the whole 24/7, or you're going to make bad decisions. You just are. So sometimes you really need to step back and just take a breather. It's okay to stay connected to what's going on. Too connected, you can actually, most of the time you overthink things, and that leads to poor decision making. So there's a reason why those channels are there.
Yeah. By the way, I do have a special announcement. We have a breaking news. Agent Jay is with us tonight. How you doing, buddy?
Nice, man.
What's up, gang? I am doing wonderful.
Looks like
I saw you guys hop on. I was like,
yeah, man.
Am I muted?
No cap. Wait a minute, man. Yeah, you're good. We got you. We have you.
All right, cool. Yeah,
wait, hold up. No cowboy hat today.
I mean,
Really?
I got. Hold up. There you go. Okay,
There you-
tracker asked for a cowboy hat, so I got the cowboy hat on.
There you go, man.
Beautiful.
There you
And
go.
by the way, Agent J is sporting the new office, and I gotta say, it looks good. I like it.
Oh, thank you. If you guys hear barking in the background, that's Ghost. He's whiny because he hears people. So
I thought he was.
sorry,
I thought he
big
was just concurring with Zenith. That's all.
True.
probably.
True. All right, gents, let's dive straight on into what we got here today. First, probably the thing that most people care about, maybe not the most crypto related, but the thing most people care about. We got the old government shutdown coming to an end sometime soon, maybe to a theater near you. Here's our latest update from ABC News. November 10th, the Senate reconvenes to move ahead on the deal, with questions remaining on how fast they can get it done. Speaker Johnson tells House members to start returning to Washington immediately and says the House will vote as quickly as possible on the funding bill once it clears the Senate to send it to the president's desk. So, your quick recap is, well, they've struck a bargain. The bargain is that they're going to do a continuing resolution till January 30th. However, there were some additional things that were funded pretty much for the rest of the year, so those will not be on the table when the continuing resolution ends. Outside of that, yes, there is a possibility that we could be having these negotiations all over again, but hopefully the big negotiation from this one has actually been pulled out separately, which is the Obamacare COVID era accommodations for the ACA Act, if you will. And that one is supposed to be held in December. When we know specifically, we don't. But that's pretty much where we're at right now. The Senate has gotten through the filibuster. They are going to pass the bill, at which point it will go to the House of Representatives, which have been wanting to pass the bill for a long time, but have been unable to because they need, the other side of the House to get something going. Then after that, it will go to the president's desk. And then once the president signs it, it is up to the federal agencies to see how quickly they can process those checks. So yes, government contracts looking like back on in the near future. And more importantly, though, all the people that are federal workers out there should be getting their paychecks in the near future. So, gentlemen, we kind of had an abrupt ending to this one. I think we were kind of banking on this one going a little bit longer, but just out of the blue, it was just like, hey, Sunday night, yeah, get it done. Were you guys expecting more, or is this about right for how this works?
It's typically how it works. I mean, we're not going to hear all the details behind closed doors. None of us are going to hear those deals. 100% not. And keep in mind, those deals, a lot of times the filibustering and the whatever side was against it is not necessarily yes, they're trying to get certain things. They may not get what they want, but they're going to hold things up to get agreements to some of their plans that they have been trying to work on. Because listen, every politician has its own angles, what they're trying to get out of this to make sure that their voters and their lobbyist friends are happy with what they've done, and that's who they answer to. So they're going to make sure that they can get those deals. These are opportunities to kind of hold things up and get those back end deals in place to where it will grease the tracks for what they're trying to accomplish later on. So we're not going to hear about or see any of that stuff. So, but this is typically how it works. Everything seems to be in order. I didn't think I had a feeling it was going to take at least this amount of time, just because the fact that I think both sides were so strong, on this topic, and they were trying to hold the ground. But keep this in mind, and we were talking about this in the green room. This is only going to be until January 31st, so it's only a couple months. So I would expect them to try to iron things out before they get there, but there could be another political move or something that might spark its head too. We already know Jerome Powell is going to be switched out in May. Who knows? There could be something around that. I'm just speculating now. I'm not saying I know anything, but you don't know what other angles people could work. Keep this in mind. This administration has been throwing curveballs at everybody across the whole world. So there's no telling what could come up out of this, but just keep that in mind. It's only good until the 31st. And I think at this point, the only thing that's left is what Trump just has to do. Just has to sign it, and that's officially it. I believe that's all that's left, really.
We have to get the official bill from the Senate. That has to go through the House, because they gotta reconcile the two bills, get them to match pretty much.
There you go.
The way that negotiations working, exactly as you said, like they're going to get this all kind of done behind closed doors, because the old rule of politics is that if you want to bring something to a vote, you better have the votes for it. Otherwise, you're going to look like a fool. So they're going to get everything ready so that when it goes through the official process, it's just thumbs up. Yep. All right. Get it done.
Yeah, I just kind of pumped in AI, kind of see what they were looking at on a couple things. But I mean, there's main talking points, but essentially, I mean, it was a hurdle. It's done, but which is crazy. I know you guys were talking about this last night on DJing, but it's crazy to me. All the news has been very positive, yet it's been lackluster, very lackluster. I mean, you've got your, QT check done, rate cut second one done. Of course, Jerome Powell had opened his mouth and stymie the market until maybe December, but that was the only thing that really kind of stumbled it. And now here we go. Government shutdown has now been, corrected again. Oh, agreements with China, check in place. Tariffs seem to be in check. Oh, now we're talking about potential helicopter money from to try to tell everybody how great these tariffs are for everybody, because it's going to be, basically a dividend or helicopter money coming to everybody from the fallout of tariffs. So all positive news, and yet everything's still kind of just going sideways. So it tells me either the markets are getting very tired, investors are getting very tired. It's probably a lot of that, and probably a little bit of mixed reactions. We can get into that more, but that's a little bit more of a deeper conversation. But that's how I see it playing out currently.
Oh, that's fair. I mean, that's pretty much it for this topic. You already gave us the good segue into the next one, which is that the old $2,000 stimulus checks have been floated around. Granted, right now it's just words out of Donald Trump's mouth, and he is a man that says a lot of things. Not all of them materialize, but this is something that has been talked about for probably a good chunk of the year at this point. Ever since we had the first round of tariffs going, gosh, that was March and April. We're already in November now. It's wild
Hold
to
on.
think.
I got to interrupt you guys. I know this is completely out there, but is this legit? I can't tell if it was a meme or AI or what it was. Are you telling me that somebody asked Trump, who CZ was from Binance, and he had no idea, even though he pardoned him? Is that legit, or is that just some meme crap? I mean, what? I mean, obviously, this is. I mean, if there's any truth behind it, it just shows you how papers are just being thrown in front of whoever's got the John Hancock, and they don't even know half the stuff they're even signing.
Based on the reporting that I've seen, it is largely accurate. I would imagine that Trump has a passing memory of who CZ is, but the people who actually know who CZ are going to be the other kind of more crypto native or even crypto focused people, which is going to be people like his son and all the other people that are working with the World Liberty Finance guys. And is it that crazy of a stretch to say that he would include CZ in a handful of the other like crypto related pardons that he's done over the year? I don't think it's too entirely crazy. The timing is a bit odd because it's like, wouldn't you have done that at the beginning? But here we
I
are.
just figured you at least have an idea who you pardoned, at least. That's all. I mean, that's the only thing I would say. But maybe not. Maybe he's maybe on all sides they pardon so many people they can't keep track.
That's an argument for sure. But at the same time, though, yeah, like sometimes they just give him an idea and he's like, oh, this looks like a good one. Do it. And he's like, wait, what was that again? But
I didn't mean to get off topic. I just thought that was funny when I saw that. I just thought that was.
Hey, so that is some of the news.
On,
gosh, do we covered that one probably 2-3 weeks ago? I think the CZ got pardoned for everything going on with the Binance stuff, and then a lot of the reporting this week has been Trump kind of off the cuff saying like, I don't even know who that is.
All right, I got a little numbers for you here. So in his first term, he pardoned 238 people, and now he's pardoned over 1,600 people. So I get it. He may not know everybody.
That's fair. By the numbers, though, if you want to look at the pardons, there was a good chunk of those folks that were.
6.
Yeah, exactly. I want to say the numbers was somewhere around 1,000. So is it a lot? Yes, it is. But at the same time, it was kind of a political movement that was made even before he was elected that he was talking about. So,
oh yeah, don't get me wrong. I'm not disagreeing or agreeing with it. I could care less about that more or less. I'm just bringing up the fact of the numbers. I just thought it was funny he didn't know who he was because he's a major player. I mean, he literally, I figured Trump would at least know the connections with FTX, the collapse, how many politicians were tied to it. I mean, that was a pretty big event that took place. That's all. But anyhow, it's here nor there.
Fair enough. Tell you what. All right. Where were we? I believe stimulus checks, huh? So they floated the idea of $2,000. I double checked my numbers since last night. The estimates that I'm getting is I was kind of spot on the money with my ballpark, which is that I was estimating probably 150,000 Americans would be eligible for it. And that is what I got back through my research. So the quick napkin math turned into some decent napkin math. So we're looking at a potentially $300 billion stimulus check coming out sometime based on how fast this is going to work. I wouldn't be surprised if it happened around January. But at the same time, this is something that will have to be approved by Congress. But overall, it looks like it's right in line with kind of the playbook that we've been talking about here. We got rate cuts, quantitative tightening's over, stimulus checks coming in. The business environment appears to be stabilizing yet again. So the conditions are looking pretty right based on what we've been talking about for almost a year at this point. By the way, it's episode 39. Can't believe we've done that many already. But gentlemen, $2,000 stimulus checks. Do you think it's happening or not?
Whether it happens or not will be determined by Congress. Obviously, we spoke about this yesterday, right? Because they're the ones that have to approve the spending, and it may happen, but it may not happen in the way that everybody expects it, in the form of helicopter money. I don't know if you guys saw, but I saw Bassett. I think it was was it Hassett or Bassett? He went on an interview the other day when the news dropped. So this was Saturday morning or Saturday afternoon, I believe. And he was on a news show talking about how the stimulus checks might come in the form of things like tax breaks or things along those lines. I don't know if you or Track saw that, Z, but
that is something I found in my research as well, which is that it was, granted, again, I preface it with this is just something that Trump said, and it's up to the rest of the team to figure out how to do it. Originally, the proposal was just straight stimulus checks, but Secretary of the Treasury, Scott Bessent, he was the one that did also say, like, there are other options to do this. Tax rebates is one of them. So, look.
So it might not be helicopter money that everybody wants, COVID style. So there's that also to consider. I think a lot of folks probably missed that because they heard helicopter money and they immediately thought, here we go. QE, alt season, perfect storm, et cetera, et cetera. So, but you have to be determined. Like I said, it's going to depend on the Treasury, and they're going to have to outline exactly how that's going to look like, right? Like you said, this is all preliminary. It's either just Trump tweeted it because he felt like tweeting it, and then his team is going to have to iron out the details, and then they're going to have to go through that process. So we're not in a state of emergency like we were in COVID, and so how fast do you actually get that out? Like, does the helicopter money come in time for people to actually spend it in the market? Like during the holiday season, which is when you would like it to happen, or does it get extended because the government moves in a snail's pace, and we're not in a state of emergency situation like COVID where it's going to get approved like that. All right, so
agreed. The timing on that one could be interesting for sure, because we've already been talking about the idea that crypto market could potentially run into Q1 of 2026, and pretty much an injection of capital along that timeline would fit into the little theory here very nicely. Whether it's before Christmas, whether it's after Christmas, even get maybe as late as February, like it's still on the table as being part of an aggressive crypto pump, depending on what the rest of the market is doing as well.
I think it was more of a political move. Obviously all this is political, but where I'm getting at is I think this was a political move because the fact that the shutdowns, the Republican side was basically labeled as holding up money for food stamp recipients and subsidies from that. And I think this is more of a way of saying, like, no, we're willing to do this. Like this, it's more of a damage control with whatever image was tainted because of the government lockdowns. I think it's more of that. So now he's throwing that out there, saying that, hey, we'd like to give $2,000 to all these people. Obviously not extreme high end earners, but that's a way to kind of cover yourself. And then he could always come back and say, see, I put it out there. Congress doesn't want to approve it. I don't tell you guys. I'm trying to give you guys money, but nobody wants to listen to me. I mean, it just feels like more of a political move. But will it happen? I don't know. I think we'd all like it to happen. I think essentially it would help out. But question is that money really coming from the tariffs? I'd love to see the breakdown of the tariffs.
Oh, do you have that data, Z? Because I saw a breakdown of tariffs, and we are not raking in trillions, man.
I only saw a top line number, and it was given me from ChatGPT. I think it estimated 90 billion for the tariffs this year.
Yeah.
But do you have anything additional?
Trillions gets into if the tariffs get extended into the long term, right? Assuming that the next president, if he's a Democrat or even if it's a Republican, just doesn't come down and just swap them away. So they had the projections into the trillions, but like year to date, no, we're not in the trillions.
Yeah. The future projections can look rather juicy. The year to date stuff, I mean, that's the cash in the bank. That's what we've actually taken in. Granted, pretty much only stuff since March, April. So we're looking at 8 months of data on that one. So it's getting closer to a full year there. So I don't think it'd be too crazy to expect it to maybe like double just for like a full 1 year timeline, go to like 180 billion or something like that. But getting to the trillions number based on the current rate, it would take you probably like 5, 6, 7 years to achieve that. But at the same time, I think you have a good point there, which is like it also depends on what happens after this, because tariffs are one of those things in particular that the president has a lot of control over because it's dealing with other countries. And that pretty much is the primary purpose of the presidency, is to be the unified figure on the world stage that speaks for the United States. So I'm hoping it brings in money. I personally happen to think that this is something that's been well needed for a long time. It's been a bit of a track record for the United States over the last 50 years to try to export industry to other nations for the sole purpose of just propping up other economies with beliefs that it'll give us more trading partners, even though it looks like it's coming at the detriment of the United States. But that's a soapbox for another time.
All right, so here's the numbers. U.S. federal government's collected $195 billion in tax revenue since October 1st till September 30th of 2025.
Did you say tax revenue track or tariff revenue?
Oh, sorry, tariff revenue. I'm sorry about that. Yeah, tariff revenue. This represents 150 to 250% increase over that same time. So it's definitely a lot more money coming in, but 195 billion. I mean, October, November, December. Yeah, you're only talking a few months here. It's not very much, 195 billion. Now, is that because the lump sums were paid up front? I don't know. Monthly breakdowns, they have that 7 to 10 billion between. They're expected 7 to 10 billion more each month from January to March, and then a surge to 25 to 30 billion per month from April to July, and see here another 30 billion per month from August into September. That's how they're kind of forecasting it. So let's just see here. So year to date, yeah. So obviously there's money coming in. Has it been trillions? No, but 195 billion already is pretty good. I don't know. I mean, for them to do these types of checks he's talking about would have to, based on the numbers, the calculations you did, it would literally deplete all of that money that's coming from tax revenue or tariff revenues would be depleted if they were going to do something like this. And they don't have enough yet if it's all going to come 100% directed to the tariffs.
That's true. So I mean, to piggyback off an argument that you made earlier, which is that if it's the stimulus check, which was originally a kind of political move with the shutdown going on, I think you could also make the argument that arguing for an increase in tariffs is saying that in the short term, there will be some downside pain, but it's for long-term future potential through reinvigorating the economy here in the United States. Therefore, you would say, hey, the stimulus check, this is from the tariffs. This is to help kind of maybe ease some of that short-term downside in an effort to get the overall economy for the entire nation back on where they want it to be in the future. Again, I think these are just these are kind of just narratives, and they're definitely political moves, as you expertly highlighted out there. It's all about how you can spin it, but at the end of the day, I think that the three of us over here kind of care less about the narrative behind it and more care about how it affects that sweet M2 chart.
Mm-hmm.
Mm-hmm. Yeah, I feel like this is just doing corrections to things like NAFTA, things like that, and also other trade agreements with the other foreign countries. But yeah, the United States has the one thing that most countries don't have that opportunity, and that is we're the largest consumers when it comes to most stuff. I'm not saying everything, but we are one of the largest consumers. We can dictate who we buy from. That's one big advantage the United States does have. But all right, not to get into geopolitical, but at this point, but I would say the stimulus, if it's going to happen, it's more of like I think it's more of a tweet. It's more like throwing it out there for a political move to make it look like, for whatever reason, whether you agree with it or not. But I would have to say, if it was going to come to fruition, I think I agree with you guys. It wouldn't be until probably Q1 because they'd have to agree to that and move forward. And there's just a lot of stuff that it's going to have to happen in order for that to happen.
Oh yeah. Unfortunately, I still think it's kind of in the category of wishful thinking still, but there's at least a will to do it from one of the people involved, so I think it's a bit of a plus. Alrighty. Tell you what, let's keep it going to probably what I think we all agree is going to be one of the more interesting topics we have here. So, shout out to Cointelegraph, by the way. I did all my show planning, and then I checked their website to see if there's any breaking news. And then they had an article that pretty much covered everything I wanted to cover, which was talking about crypto markets, inflation data, the stimulus check, and then also the government shutdown. So, thanks, guys. Give me a script here, and you didn't even know it. Main points that they're talking about when it comes to Bitcoin right now. Current price, about $106,000, but we are also coming off of our 50-week moving average. These guys have an exponential moving average, but if you caught the show last night on DGen Roundtable, you know that we are more interested in the simple moving average, the 50-week there. And then they also bring out the other thing we wanted to show, which is the heat map showing kind of where the market's feeling pressures going on right now. So I'm not going to rely on them for that one because we have our very own data from CoinGlass. Got a few different models here I want to look at based on the different scales that we have. Currently, looks like there are people that are looking to short the market. A good bit of them got liquidated, but there's still a good chunk right around that 108 level, and there's still a little bit remaining around that 107 level. But if we look below that, we have another little band, similar supports in size pretty much, right around that 104 or 105 and 104 level. So short term, if I had to argue, it looks like people are expecting more downside. And I think this
Let me ask you this. Can you zoom out
Yeah.
a little bit on this one, Zenith? I just want to see a little bit more on the data. I just want to see, like, because
switch to this guy.
a little bit more. Is there not more in this? Because when we looked at it I know things changed, but I know last week we had a huge liquidation area up at 115. It must have been people, already closed out a lot of their positions because we had a lot of liquidations up at the 114, 115 area last Monday.
I'm seeing 113, 116, 117-ish. I can try to manipulate.
There was much more higher concentration than that. So that's fine. Things have changed, obviously.
Let me see if I can pull up the chart that track. There's a usually different chart that we pull up, Z, because you have CoinGlass right now.
Yes, I do.
I think Tracker's referring to it's a more visual bar graph.
Okay.
That shows the heat map. Go keep the conversation going. I'm going to go ahead and take a look at it right now and pull it up.
Yeah. Anyways, the point about talking about this is that we want to look at what's going on with the market from people holding positions about going up or down and where they can get liquidated. Because if you remember previously, let's flip over to the other CoinGlass tab that we love, liquidations. Today, nothing massive. 318 million. Is that a lot of money? Yes, it is. Is that a lot of money in relation to the amount of liquidations that we've had in the past or even most recently? The answer is no. And again, if we come back down to our very warped liquidation chart, this bar is going to be sticking here for a while. I don't personally think we're going to be able to beat 19 billion in liquidations, but if we try to zoom in a little bit on our shorter side here, you'll see that last few days, it is effectively nothing. Pretty much the last relatively big days that we had for liquidations, that's going to be the 2nd and 3rd of November, pretty much about a week ago, when we actually did drop down to that 99K level and broke that 100K level. Jay, do you have the data for us, sir?
Yes, sir.
Excellent. I see you.
Track, this is the one that you look at, right? That we look at regularly?
Well, the one we looked at was the one with Zenith did have, but last week when we looked at it, I like to see this one too, but ultimately, like what it seemed to be working like clockwork is if you overlay, the cycles, if you overlay that, you overlay the fib levels, you overlay that, and then a lot of times, like we've always noticed, based on, you can almost tell where the price is going to probably gravitate toward, because the market makers are going to grab up as much liquidity as they can. And that's what has been the theme for a while now. So based on what we're seeing, what price actions do we think is the most likely one to get hit next? And here, it looks like there's a lot of concentration in, where are we at here?
Between 107 and 108K.
Yeah, so so it tells me we're probably going to go up some, right? Yeah, we're going to go up some to take that out at least. Like they're going to gobble that up, because that's what me and Zena talked about last Monday was, and we've been talking about this for a while too, is you could almost look at where's the most liquidation going to be happen. The market makers, it's just too much. It's too easy of a trade for them because it's such a small market cap with crypto. They can push this price around and just snatch up and keep building their bags, because it's not even fair. It's too easy of a game. Like, why would they want to disrupt that now, knowing that they've been just liquidating people left and right? I mean, Binance did it. Obviously, that one big candle that Zenith was showing that happened when we had that big wick down on liquidations. I mean, that was mainly because of Binance doing their, doing whatever it was. I still think that was a little bit more coordinated because there was just too many things that were lined up for it. But
For
the
sure.
central
Real quick,
exchanges are just sniping people.
that's true. To expand on the idea you're talking about here, what we're looking at is we're looking at areas where if the price moves to, people holding these positions will be liquidated. Okay, what happens when liquidation happens? Well, those positions are closed for the traders, and whoever they made that trade with effectively pretty much reclaims or recoups the losses from that potential movement, meaning the exchanges. The trend that that you've identified, really, you've been on top of this, is that in the last couple of months in particular, it has appeared that wherever the highest amount of liquidity is, and by liquidity, I mean people ready to get liquidated in case the trade goes poorly, it's kind of seemed like the price has just floated in that direction nearly independently of the other stuff that we see going on. And if we look at that scenario and you just analyze, okay, who wins, who loses? Well, the traders are losing, and the exchanges are the ones that are winning on that. So if you're the exchange, who are the market makers, by the way, and you do have a direct correlation to how these prices move based on the conditions that you've set, it appears very suspicious, to say the least.
Very well said. And then on top of that, this is another reason why central exchanges are been pushing this so heavily. And this is the one thing that kind of like basically TradFi has got in and mucked up the entire crypto market. And they've done it by, they plan this stuff. This is why if you have the spot ETFs, now you can do these kind of things. Now you can control the price. You can do all these games. And people that are keep trading on leverage, whether that they're placing their bets that the price is going to go down or go up through puts and calls, but basically they're going to get liquidated because they're obviously big leverage plays. They're going to get liquidated because what they don't understand, this is not like a regular market. This crypto market is such a large market cap, they can push this around very easily, and they've been proven to do so consistently. I mean, hell, Binance alone absolutely just nuked so many people as well as the prices. A lot to go in there, that one, but we unwound that one when it happened. So if you overlay that and you overlay with a lot of stuff that Jay does with technical analysis, the fib levels, the 60-day cycles, that kind of gives you another indicator to kind of get an idea where we're probably going to move in the short term and potentially in the long term. The one thing that Jay, you absolutely nailed was when you did your stream on Walk the Block, what was it, about 3 weeks to 4 weeks ago, on when the 60-day cycle lows were going to come in. We came in right in at those, right in that area. Because remember, you said 60-day lows would come in sometime between October 19th and November 15th. And of course, the ultimate low ended up being on November 4th. At least I'm looking at the Ethereum, but I think it overlays with Bitcoin as well. So the 60-day low was spot on where it was, that area. Now we're coming back up. So now, of course, I know you're going to do another one on Walk the Block on where do we go from here. But so that was good. And I think if you looked at it, the liquidation maps also aligned to those prices as well. That's another reason why people would gravitate toward it. So it's just another narrative. Wherever the easy money is, the institutions are going to travel and go toward it too. And the technical analysis is just more indicators to kind of, prove that narrative until it's broken.
Z, do you happen to have like the open interest levels handy by chance? I can't find a chart that I'd like to look at, because I know that leading up into like that all-time high, the open interest was making new all-time highs, I think, before we got that really nasty flush. So I would be really interested to see what levels they're looking at right now compared to their prior highs.
This actually came right from that
There you go.
Cointelegraph article I talked about.
And the flush was
I
on.
wanted to see.
Yeah, the flush was on October 10th, correct? Was that the flush? Friday,
is a more
October 10th. That was the big flush that Binance caused. I don't know. This is a little bit that would have happened before this, but
this is a
the
more
next
recent
flush.
one.
Okay, then you would be looking at November 3rd and the 4th is when we had those two big drops.
Stand by.
There we go. Is that it? Yeah, I think that's it. Yeah. Yeah. So open interest was climbing, so it was making new all-time highs. Did we make new all-time highs in the open interest chart around the all-time high Z? Like,
Oh yeah,
yeah.
Here's your historical for reference. We've been making new all-time highs for a long time on this one. This is the entire cycle. This is only going back to 2022. Even if you want to include the top of the last cycle, it doesn't even get close to some of the stuff that we've seen this cycle. The
Well, that's
open
because of the
interest has
ETFs.
gone
That's a lot of
wild.
that's probably because of the ETFs and finance and TradFi.
For sure. Tell you what, let's look at it. The ETFs went live January. Oh gosh, I know the date. Mid to mid.
It's about there.
Yeah.
Yep.
Sorry, no.
Look
this
at
page
that.
right here.
Yeah, and look
January
at it.
9th.
That's when we started breaking out to new all-time open interest. From that point on, it's been going straight up.
Yeah, the open interest on the market at the time was $19 billion. Even today, as we're talking about how low it is, it's at $69 billion. We peaked out at pretty much $93 billion. So in the course of what is effectively, a year, because 2 years effectively, we've pretty much done a 4x on that amount of open interest, almost a 5x, meaning that the market has grown. The open interest market has grown 5 times in 2 years.
Yeah. So even after that nasty flush, comparatively to even back in 2024 and 2023, we're still open interest is still like pretty high up there.
Oh yeah.
Check that out though. Check out that chart though. So the big drop was on October 10th.
Yeah.
Look at that free fall.
but it had to happen.
Mm-hmm. Yeah.
Like I know a lot of people really got devastated by it, but
oh yeah.
It's a correction, is what it is.
Got to purge the system.
Yeah, it was so bad. It was so bad though, man. Like when I say bad, how do I know? How do I want to compare this, man?
Well, you had millionaires going flat broke. I mean, you had big KOLs, you had big influencers, you had people that they say lost everything.
The flush was so bad that even people practicing relatively safe leverage, as in like 2 to 3x leverage, got wiped. That's how bad that flush was.
Yeah.
Right. Because I mean, when we talk about people using leverage, right, we're like, if you're really conservative, practice with low, like 1.5 to 2x leverage. Even that didn't keep you safe. So.
Right, 2 or 3x is very conservative, but it just showed you. And then of course all the stories started coming out, and when you unwound what Binance had done, the shady stuff, obviously the tweets that came out where people were putting on shorts minutes before the actual devastation kicked in. Then places like Binance were basically fulfilling people's short orders, maximizing the pain to the downside on their longs, but then closing out their shorts because they needed to raise money to pay off, the other interest. So it just you got screwed on both sides. Even if you had straddles on, you got destroyed. So it just goes to show that when you're dealing with central exchanges, the game is rigged. I mean, if you pull that crap in TradFi, which it does happen, there'll be more investigations. But in crypto, it's pretty much still the wild, wild west. It's just now that TradFi is coming in. And once again, it goes back to what we've been saying. This is easy money for TradFi. And TradFi is in bed with central exchanges now. It's clearly been happening for a while, especially with ETFs. So that's why I would not be doing any leverage, period. I don't care what you're doing. Unless you're prepared to make sure if that all goes to zero, as long as you're willing to sleep at night, then so be it. But if you're going to put money on that you can't afford to lose, I would not be doing leverage. Not in this game. It's a rigged game. The game is rigged since TradFi's got in, and it's easy for them. We've shown you why it's easy.
Absolutely. I think he's just taking a quick step away. But look, the whole idea of playing with leverage, we've talked about this a good bit, is that it's definitely a dangerous game because you're trading the options contract itself. And you're paying the premium for the options contract, meaning that if the options contract doesn't go the way that you thought it did, you pretty much lose everything you paid for it. as opposed to a more traditional like buy and hold kind of style investing, which is that at the end of the day, you still have the underlying asset. The options contract A is price dependent and time dependent based on when you get in and what level you get in and where it moves. So it's
But Zane, it's even worse though. Those are the factors you have to deal with. Then now you're dealing with a rigged game. Now you could have shorts on and longs, and if that price were to flush down, there's a liquidation problem that these central exchanges have. So not only are you going to they're going to let that ride and get destroyed on the longs, but now they're going to turn around and close out potentially your short or your put that you have in place because they're trying to fulfill other people's orders because they have to, and they have the right to do it. And then if you read the fine print and the terms, you're agreeing to all that. So I'm saying right now, it is a sucker's game to do this. Unless you're a big market maker and you're an insider, then sure, obviously it's a very well game because you're writing the rules of the game as it's being played out.
It's true. All right. We've obviously covered the downside to this a good bit, but I guess it kind of does beg the question, okay, if it appears to be this rigged game, if there's so much volatility, if there's so much exposure, why do people do it in the first place?
I can't answer that one, man. I can't answer and I'm not smart enough to be dumb enough to understand why people do what they do, except people like to gamble. And I think that's ultimately, they look at that dopamine hit, right? That's what I think it is. But unfortunately, I think listen, there were people that got absolutely destroyed. And I mean, people who had tens of millions of dollars who got completely zeroed out. I mean, essentially, there were stories out there, whether or not it's true or not, people committed suicide and stuff because they've lost everything. It's not too far-fetched. It really isn't. It's sad, and I think that people need to understand that playing these leverage game central exchanges, it's very much like the Wild Wild West. Trust me, crypto is not regulated. It's still not regulated. I don't necessarily need the government to step in, but what I do need to have in place is if central exchanges are going to provide these tools, make sure you read the terms and the contracts, what you're agreeing to before you move forward with it, and understand that you have a high probability. And the other thing is, look at the central exchanges who had these problems. Me personally, I would never do anything on Binance. That's my 2 cents. After what happened on November 10th, I wouldn't touch Binance. Keep this in mind. Binance is not what it used to be with CZ there. Binance is now the gentleman who was put into place before ZZ was arrested and had to step down. He is a World Economic Forum young leader that was put in place. You can go on their site. You can look at it. They're a partner now. It's there. I'm not shocked. I'm not trying to say that this was, I'm not trying to. Everyone's got a track record. I would stay away from the central exchanges who can't seem to have a fair game for everybody. I would stay away from those central exchanges. That's what I would be doing. But ultimately, what we need to do is look at
fair game regardless.
Well, when TradFi gets involved, nothing's a fair game. So, but I'm just looking at it now. So based on what the possible liquidation levels are and whatever, what can we take away from it? What can we kind of get an idea using it as another indicator? You're just following the money. So if the big market makers are going to push price around and there's easy liquidity levels sitting there for them to take out, you can pretty much get a good idea they're probably going to make the price go to that direction and liquidate those people, especially if it's not that far out of the way and if it's high concentrations. That's kind of what I'm seeing, and that seems to be the trend going forward. So based on that, what do we think the level of the price in Bitcoin or Ethereum could be probably navigating to here in the short term?
Based on what I'm seeing the next good chunk of people that get liquidated are people that still have shorts on, and they have shorts and their liquidation level is that 106, 108, 110 region. Based on the theory that we've posed here, if we assume it to be true, I would imagine that we would start moving up towards those levels to try to liquidate that area. At the same time, though, I do think it also matches what I'm seeing on the chart as well, which is that right now our next the 106 level is an important level. I think we have to get through from a support and resistance zone. But the next thing above that is our 20-day moving average, which is currently sitting at $108,000. So you want to do the classic chart move of go try to retest that 20-day moving average. That's the exact area I just mentioned.
Yep. Gotta get to that previous support area we've had. Correct. Which has been right around that, we'll say 106 to 108 area. That was that classic support that had held up for a while, and now we got to get back through that.
Yeah, I think that right now, what I'm also seeing in correlation to this, and I think that the fear and greed index is showing why I'm seeing these shorts that are predicting downside movement. I was looking at this earlier. Currently, we're sitting at 26. We got all the way down to 20, and then we really have not gotten anywhere above 30 in the last 2-3 weeks. So, or excuse me, when we did have our bit of a relief where we started pushing up towards 116, and then I was made to look like a fool as price dropped down to 99,000. We got up to 50, but then after that, it immediately cratered back below that 30 area. So what I'm seeing from that indicator is that there's a lot of fear in the market, anticipation of downside or downwards price action, if you will. And as a result of that, I think the open market interest and the short positions are reflecting that. Or honestly, the data comes from each other. So it kind of feeds into itself. So I think people are expecting downside action. I don't entirely know why from a fundamental standpoint, other than expecting that this 60-day cycle has not yet made its cycle low and that we have another one coming. Is it in the realm of possibility? Yeah, it is. The downside action case is always in the realm of possibility, especially based on things that get affected, whether it's short-term events, real-world events, news stories that come out. Another big hack, it's always a possibility, unfortunately, in the crypto world, but these things do exist, so you have to take it into account. That being said, based on what I'm seeing, I stick by what I've been saying this whole time, which is that everything about this market and everything about the overlying economy surrounding it is that people are looking to inject capital into this. The circumstances surrounding the market are becoming more and more favorable, and more roadblocks are getting cleared out of the way. So based on all this, it leads me to believe that, like, yeah, there's upwards price action in the near future. I also happen to think that the way that the market defended that 99K level, they defended it with a vengeance based on the data that I was looking at. Volume for that was through the roof. Even if you want to get granular with it, if you break down and you open up that 1 hour, that 15-minute chart, it shows you that the volume, the vast majority of the volume, came in at that level. So I think that there's a good basis support. I think that 100K number is also a very powerful psychological level. So because of that, I think that, yeah, we are going to move up. If we do move up, based on the theory that you've posed, people have shorts on, people are going to get liquidated. I don't know. Feel free to call me a irrational optimist, but that's what I'm seeing.
I'm in the point of what's going to cause the most pain for everybody.
That's true. And by the way, for the folks that have been watching the show regularly, we did cover Max Payne theory previously. If you think this falls right in line with that, does the whole idea of like talking about the idea that the markets are being manipulated by the market makers, does it sound a little tinfoil hat theory? Yes, but there is an observable phenomenon that occurs, which is why Max Payne theory exists. So there you go.
Yeah, we were covering it on Monday night last Monday. We were talking about it, and then we got Max Payne. Went into like Tuesday and then off to Wednesday. So now here we are down at the bottom. Now everything's kind of getting beat down to freak everybody out, to get everybody to start, getting out of the positions. And the market makers know that everyone's living on this 4-year cycle, so they know if anybody who's on there, this is a great time to shake a lot of people out. Now, it also is a time it could bring a lot of pain. It could also be a lot of pain to bring it to it where they bring it down and really cause a lot more pain for people. A possibility as well. But
if we're talking Max Payne, and still a bullish scenario, what I would like to see if we are going to get the Max Payne theory and we're going to get into a left translated cycle, because I have two the primary count that you have right now is you have that day 35 high, and then we're like ideally the low would be in, otherwise you'd be getting into an extended cycle. I have an alternate cycle count with a day 10 high, and currently on day number, let's see, what is the alternate cycle count?
The alternate cycle is that we had the 46 day, and then it's the start of a new cycle, right?
Yes. So I'm at a day 10 high, and then currently we are on day number. Let me double check this real quick.
I'm looking at 25.
My screen would load. Yeah, day 25. Yeah. So if we do sweep those we head into a left translated cycle into early December, right? I would be expecting a left translated cycle into early December for the Max Pain scenario. And then what I would like to see on that lower low, I would like to see a lower volume candle on that low. And then I would really like to see this particular level hold, because we have a weekly fair value gap that has not been filled for Bitcoin, and that would completely fill at 90. That would completely fill at 92,829. So that would be the level that I'm looking out for, because right now that wick hovered above a 60-day cycle low back in June of 2025, right? And a wick down to that 92.8K would fill that fair value gap on the weekly. So that's the level that I'm looking for Bitcoin if we are going to sweep the low. So you're looking at around 92.8K in terms of price. Find support there. If not, finding support at that 60-day cycle low that was made on the 16th of June. And that's at, the low was at 98.2K, right? So between 98.2 and 97.9. So basically 98K, right, is what I would like to see hold. So that's in terms of price. 98K is my price that I wanted to hold. Volume wise, if we are going to sweep the low, I would like the volume candle to come in much lower. And even with this recent low that we made in November 3rd, that was a lower volume candle. So that's already a good sign for the bulls. And then in terms of time, we're looking at early December, like around December 1st at the earliest, if we are going to head into a left translated cycle and we get the cycle low around that time, right? That's where I would look for the earliest, right? This is worst case scenario, max pain. And max pain because people finally are feeling a bit of relief because of this rally to the upside, because of all the things that we've spoken about, right? Extended, where government's reopening, rate cuts are continuing, QT ending December, and then helicopter money, right? So that would be your max pain scenario at the opposite end of all those theoretically good pieces of news. Something nukes the price again. So you have your price, you have your time, and you have what you're looking for in terms of volume. If we sweep that low at a lower volume candle, I guarantee you we're also going to be making bullish divergences on the momentum indicators. So profits that I took during that to close to $5,000 Ethereum, right? So Wonderwolf says he got a base case around 94. 94 is a good level, right? The only reason, Wonderwolf, why I'm looking at that like high 97, 98K region is because it fills that weekly fair value gap, right? That has not been filled. So that's like the next area that I'm looking for. But 94, let me see. Is that a range point of control? What's the point of control? Give me a second here, Wonderwolf. Let me pull up a volume profile real quick and see, because that 94 actually might be the 94 might actually be.
What I'm seeing at 94 right now is that back in late April, early May, after we were coming out of the old tariff dip, there was a good chunk of data for probably about 2 weeks there where it looked like that 94, 95 area was acting as a bit of resistance. And then if you go back a few months before that, late February or mid-February, that same area was acting as a bit of support as well.
Yeah.
So
Z, if you take a volume profile of that range that you were just at, like right there. Yeah, right. No, not there. The prior range. You don't have to yeah, you don't have to do an indicator, Z. It's one of the tools. It's on, what do you call it? It's on the forecasting tools on your left-hand side. It's the fifth from the top.
1, 2, 3, 4, 5.
Oh, actually, no. Your tool set is different from mine. Yeah, it's on the forecasting tool. So if you just hover, it should tell you like the name of that section.
Sorry, folks, we're getting a live teaching on. Do I not have it?
Let me share. Let me just share my screen real quick.
Yeah, save me. Please save me, sir.
Okay, so Wonder Wolf has a good level. Like for him, it's the algo bots, but I think let me know when you got the screen pulled up. Because I see the blue screen loading. I'm not sure if it's up yet. There we
Come
go.
on, there we go. We see you, sir.
All right, cool. So Wonder Wolf says 94. I think the reason why 94 is a magnet for his algo bots is because, so here's the range that we're talking about, right? You take a volume profile of that range, which we just did, and look at where the point of control is for that range, 93.5. So 94K basically, right? 93.5, 94K, pick your poison. All right, so that 93.5 is the area where the most amount of trading occurred within that next range of support, right? Because as it stands, right, we are entering that next range of support if we were to go down that much lower. Where is my right? Because currently we are hovering around this prior range. If we lose this range, which is there's your 60-day cycle low that I was talking about. If you lose that range, the next range of support is that lower band right there. And the volume profile tells us that 93.5 is the point of control for that next range. So 93.5, Wonder Wolf's AlgoBot says 94,000. Yeah. So if we do enter the next range, then look for that price area to serve as a magnet, right? Because your points of controls are magnets in terms of price to either use as support or resistance. So yeah, that's a good call, Wonder Wolf. I would place bids there if we lose the current range.
That's good support level there. I agree with that. On the not just because of what happened in April and May for that levels, but also that was also kind of a support POC level going all the way back into the 2024 all the way into Q1 and Q2 of 2025.
Yeah.
So it's been a long a long price action in those areas. I'm still in the camp that I still feel like I'm in the camp where max pain is sideways. Like, just don't get me wrong, we could go down, we could drop down, but just enough to just shake every area out. And then once they've exacerbated shaking out as many people as possible, to me, the most max pain would be then pump this thing up. TradFi is getting out there. Rate cuts are coming. Stimulus it's going to be more risk on assets are going to be pumped into the market. That's going to create a FOMO into the area. More people are going to get into crypto. More people that are not even in crypto would be willing to get into it, and then you're going to see whatever mega nuke is going to happen. I'm still in that camp that eventually this is going to play out where there's going to be a massive just nuke that's going to occur, and it's going to wipe out most holders. And then people are going to be screaming for regulation of Bitcoin. And then that's when TradFi or the government's going to come in and be like, you know what? I'm glad you guys said that. We're going to be more than happy to step in.
It's a little bit of a doom scenario, but the logic makes sense to me.
Yeah. I mean, if you sweep the lows after this euphoria, anybody who's not looking at the charts the way that we're looking at it, they're probably just going to give up. Right. If November 3rd didn't make them give up, like this is going to make them give up. Like
the old triple tap.
Yeah.
And that's why I think that's going to be that's going to be bad for them. I don't think they want people. I think they want to just grind people sideways and just keep liquidating positions. That's the easy money. Now, if we're looking on those charts, I don't see any high concentrations of liquidation levels. Unless you zoom out further, I don't see any massive liquidate. Yeah, there's some I get around 107, 108, but I don't see any massive liquidation areas that would, I think once they exacerbate that scenario, and if there's not enough, then maybe that's enough reason to now start moving things up, start pushing things up due to demand. But I still think we're still going to go up higher. The thing that's interesting for me is that clearly Bitcoin is not considered a risk on asset. I don't think it is anymore. Bitcoin ran. I get Solana was involved in that. I'm excluding them from the conversation though. But Bitcoin has been that steady go-to digital asset hedge against inflation that's been working since Q4 of 2022, and it led the pack. It kept going. It's held up its price still relatively well. It made all-time highs. It's done very well if you're just in Bitcoin. Everything else outside of some pockets here and there of certain crypto has pretty much not done anything. It's still down heavily. So I feel like the rest of the crypto market is more treated like risk on assets. Bitcoin doesn't feel like it necessarily is. It's, if anything, Bitcoin's done very similar to what gold's done during this time. It's been moving up along with gold moving up during this macro environments. So there's something to be said about that. I get why. I mean, Bitcoin's more accepted worldwide. A lot of governments are holding it. It's treated as more of a maturing asset class, unlike the rest of the crypto industry. Ethereum, I get with smart contracts and all the technology and stuff. That's highly speculative still. I know we're not there yet. I know all signs point that we're going that direction, but I just feel like that's kind of how I'm looking at it. So if risk on assets are going to truly be in favor, I would expect the rest of the crypto industry to do real well. If that's not going to rotate in and we're not going to get that, obviously it's going to be doom and gloom. But I feel like it will be. It's going to come down to those rate cuts. If you're going to get another one December, and they're speculating potentially another one if they do or not in January or February, and then the new administration comes over, Jerome Powell, they're going to be very, very aggressive with potential rate cuts. But that would have to come to fruition. I would say if rates got down to somewhere in the 2.5, 2 area, if we were to cut that aggressively over the next 2026, that would absolutely fuel it. And then whenever that time starts to pivot and we start to do quantitative tightening again, where rates could start going up, that's going to be absolutely, now the market might have already started rolling over before that happens. I'm just trying to forecast how this is probably going to play out. Obviously, black swan events we can't forecast, but I mean, I kind of feel like something like that's going to happen. I'm still in that camp.
You're getting aggressive with those rate cuts over there. I was going to say if we get 2 more rate cuts, quarter points, that puts us at 3.25, which I would argue is a pretty historically low interest rate. But once you drop down below 3, that's something else entirely. And if you're at that level, quantitative easing is back on.
The administration has been very adamant about cutting rates aggressively. They've got to refinance all this debt. I'm telling, I almost guarantee some of these tariff talks in the background, the restructuring of people's debt was involved as well. The amount of U.S. debt people are holding. And there's going to be negotiations, and the biggest boogaboo is the debt. How do you control the debt? How are you going to get this thing restructured? They need lower rates. There's only one entity that can cut those lower rates, and that affects the entire world, and that is the Federal Reserve. They have to lower those rates. And with the new administration coming in, I mean, politics are going to be pretty aggressive, I feel.
Yeah, it's hard to argue against that.
Yeah.
Gosh.
Yeah, did you guys catch that news this morning about the IRS and the Treasury? Talking about how the issuing the guidance about the quote was a clear path to staking all digital assets and share staking rewards. So that came from the U.S. Treasury and the IRS. So that's obviously it's another bullish scenario, right? Especially for Ethereum, right? Because if staking is now approved, well, oh, there you go. Yep, there it is.
Yep. And this is what we were talking about that was coming, because once they did approve it, now they're coming out with more of the regulations now. It's like, well, how is this going to look for everybody? More guidance on how this is going to actually transpire. Like you said, this is extremely bullish. So if people are going to, like these treasuries, these ETF treasuries are companies like Bitwise we've been covering for a while. If they can start really starting to do this and starts to show, and also they're able to have this as a asset on their balance sheets, it's going to do very well. So more companies may start to follow along. I mean, it certainly is a bullish narrative, that's for sure.
I think that we've been waiting for this for, gosh, how long now? Pretty much ever since the Ethereum ETFs came out. We asked, like, when's the staking one coming out? But I think that this lines up with the other thing that we've been following, which is we love that Ethereum strategic reserve tracker. And this is what they were hoping for. So, gosh, it makes sense. It just does.
I mean, Grayscale's ETF, they already had it proved that they can start staking it, and it's already going to turn into dividends for stakeholders. I mean, it's just going to be a form of a dividend for TradFi folks that don't understand how the whole staking mechanism works.
Yeah.
A percentage will be handed out as a dividend.
Yeah, which is great, because right now ETH staking offers certainly a much higher reward than most traditional baskets to offer you a dividend, right?
Yeah.
So what's the current staking rewards? Like around 5%?
Numbers I'm looking at flux between 2 and 3.5.
Oh, it's still good. 2 and 3.5. Now, numbers might decrease as more people pile in, but 2, 3.5.
And you froze up a little bit, Jay.
Yeah, we lost him. I was worried it was me. Gosh.
Am I back?
You're back.
We're back, sir.
Yeah, but think about 2 to 3% on like $1 billion portfolio, multi-billion-dollar portfolios. It's not too shabby.
Millions of dollars.
Well, like you said, I mean, the whole point is it's preserving your capital at that point when you have that kind of money, right? A lot of it's just where can you park your money, hedge against inflation, and also recoup a dividend while you're just sitting in those positions. It's a pretty good place to be.
Yeah.
But I wouldn't say that. But the one area is like, these are all great. How do these institutions handle it when we go into a bear market? That's the one thing that they haven't lived through.
That's true. That's true for sure. And by the way, for the reference there, better data I'm looking at is closer to 3.5% pretty consistently for ETH staking rewards. Like a good dividend stock is going to give you like 3% if you're lucky. Some of the absolute best that people go crazy for, the big dividend folks, they're like, oh wow, this one pays 4, even 5 sometimes. So it's up there. It automatically injects itself in that game for those folks that are looking for that.
Yeah. Yeah, they're so in a bear market, they're like, a lot of these guys are going to see that stuff and they're gonna like, oh, okay, we have a new place to earn a yield, but they're going to get excited, and I'm pretty sure that these guys are going to be as guilty of this kind of stuff as we are, right? When we first started out, they're going to see bear market, they're like, okay, well, we have to unstake and stay at that position, and then the staking, like the unstaking queue, is going to be backed up for like months.
Classic, if you will.
Yeah.
Oh my god.
So before they can unstake and sell, it's like, okay, bear market lows in, and then they sell it to lows.
Yeah, that would be rough for sure.
Yeah.
Oh my gosh.
I just, yeah, it's gonna. I just, yeah. Going back to what we were saying though, there are a lot of. There's more bullish narratives going on right now, and everybody seems to be more pessimistic on this entire, not just on crypto, but on the overall market. Like most of the experts in the industry have stated, like a lot of their customers just think this is one of the most hated bull markets they've ever seen.
Bro, what do you mean, man? We got nuked. Of course, everybody's pessimistic.
Oh no, I'm talking about like traditional markets, like TradFi. A lot of people are upset and saying like, why is the S&P going up? Why is the Nasdaq going up? Well, hell, why is the Russell going up? Like, these things should be falling. The economy is not as good as it's supposed to be. So a lot of people are very not happy with the overall markets going up. It's very hated, and that's across a lot of the industry. A lot of the big guys on Wall Street have been talking about. So they say it's very hated. The crypto industry right now, a lot of people are obviously, the 40-year narrative is in place. A lot of people have been saying how they want it to dump, whether or not they believe it or not. I just think, I don't know, whichever is going to cause max pain, that's what you can expect probably is going to happen.
I think
so
that
you need to be a contrarian.
when it comes to the overall center of the markets, I think you're correct, which is that the sentiment is not great, but yes, the numbers keep going up, the line keeps going up. I think that there's a very good case that a lot of this is actually stemming from, honestly, AI. There's a very famous graph that I keep seeing, which is that people show the S&P 500, and then they also show the jobs market, and they also draw a nice little line of when ChatGPT got released. And right at that moment, they split. Before that, they are highly correlated, but after that moment, they split. I think there's a good amount of pessimism going on with that, which is that we've started playing around with the AI tech, and people are not happy with it. People are getting laid off. The quality of products coming out is getting worse. The quality of services is getting worse. And the overall market appears to be largely propped up by just the classic 7 that you hear. And then Nvidia is leading the pack right now. And there's even people speculating that like a lot of the economy is kind of just like the top 7 companies just shuffling around money to each other effectively. So on
That's
paper,
typically how a lot of markets are, though. I mean, honestly, you had the front 4: Facebook, Google,
yeah, you're not wrong.
Apple. I mean, yeah, a lot of times these big tech companies are the ones that are pulling the rest of the market along with it.
Yeah, I just think that it's been very much exasperated lately, and
Mhm.
especially from the consumer and job holders market, they've been kind of taking a beating on a lot of stuff. So it's interesting that the big TradFi guys are also not happy with it, because if that's the case, then no one's happy, but the number keeps going up, which is rather confusing.
Well, the TradFi guys are not necessarily hating it. It's their customers. A lot of customers have been calling and saying that it's the most hated market. They cannot understand why does this market keep going up. That's what
That's
everybody
the
can't
argument I'm
understand.
making, which is that I
But
think
that's
that this is largely like average Joe sentiment. Like, sure, TradFi guys might be thrilled, but overall, like the general populace is getting tired of this real quick.
yeah, Main Street. Yeah, Main Street is very pissed off about everything, and rightfully so, because corporations are controlling and centralizing more and more of all this, and that's what's happening. AI is just another bugaboo that's going to keep that separation of hate very alive. Um, Technology is always going to be a disruptor. I saw that interesting. It's pretty fascinating. I did watch on Rogan actually on the interview with Elon Musk, and he's got a pretty fast. What he believes is anything that's a digital world, that you have a job where it's more digital, it's going to be pretty much obsolete. Like anything that actually involves actual manual labor or actual um, human interaction is the only thing that's going to still be going. Most stuff's going to be fully automated. Now, with that being said, I think they're still a little ways from that, because just like I stated this last week, and I keep stating it, this whole similarity of how we're bubbling up is so reminiscent to the .com bubble. It is so reminiscent. Like that was going to revolutionize the entire world, whole new world, everything. Same things I'm hearing with AI is exact same things I was hearing with .com, and companies were just throwing money at everything, not quite sure what they were doing, and I'm seeing it in the industry that I currently work in. Companies are throwing money at AI. They're not sure how to use it, how to leverage it, and it's one of those things that companies do not have their houses in order to benefit from the AI technology. People are chasing things that are not ready for, and you're going to see it's going to be a big bubble. It's going to pop, and I'll hold on to what Kathy Wood and what Ray Dalio and some of the other smart guys out there have stated, that yes, the AI is a bubble, but that bubble will not pop until you start getting quantitative tightening again. That will be the signal when the bubbles typically pop, and that's traditionally when bubbles pop, and that makes a lot of sense. While if they keep cutting rates, cash is getting cheaper, people are going to spend money, and they don't have a problem with it. It's only when money starts to get tight do they start restricting things. And keep in mind, companies have already been cutting and laying off good portions of their industry because they think AI is going to be the silver bullet. It's going to start, cutting some of their overhead costs, because all they look at, everything in these big corporations, they're only looking at it from quarter to quarter basis. That's as far out looking as they look at most of these companies, quarter by quarter. That's it. So it's the same narrative all over again. Just here we go again, and you're going to get this run up in the market, and then when you content in, you're going to have a major pop, and things are going to crash pretty hard. That's what's going to end up happening. Now, whether or not it's going to align exactly like that, probably not, but that's kind of where we're probably gravitating toward.
The big difference that I see between this one and the .com bubble is that the technology is fundamentally different. And what I mean by that is that the technology required to fuel the technology is vastly different. And that's just from the supply standpoint, which is that the .com bubble was fueled because we were early on in technology. Everything was relatively light. The processing power was pretty high for the amount of people that were using it. Back in the day, those guys were looking at like, I just need to host a website. A single server can probably handle 1,000, 10,000 people before you need to start upgrading servers. The issue with AI is that it requires so much computing power and so much electrical power on top of already sophisticated technology that the players we're seeing in the space are really these big guys that are able to shell out the cash, able to get everything in alignment with it, whether it's the expertise, the actual technology, the underlying logistical support, whether it's cooling, the physical space it's required, the electricity. it's so much and it's so different. Like if you look at if you look at the profits of these companies, there's no profits. It's there's so much cost going into everything. I understand that the technology is revolutionary, which is that it has the ability to actually replace people and move us towards what is arguably a new economy versus the dot-com bubble was just like everybody has a website now, so it's a lot more accessible. It's that one was more about access. This is more about actual like potential for the technology. I don't gosh, I don't know how to
You're correct to say the things you're saying. You're absolutely correct. It is more expensive now, even with inflation taken into consideration. It's still more expensive now than it was with .com. But .com, you still had to run all the tele fibers. The whole networking had to be labeled. Server farms had to be built out for companies and their infrastructure. You still had to get, people had to be trained how to, program and write everything. E-commerce had to be changed. Logistics had to be completely upgraded across the board for shipping and keeping up with demands on things. There was a lot of stuff that had to be greatly changed to make this all work, and it didn't happen overnight. What I'm saying though is, and you're absolutely right on that, that's a whole nother barrier to entry that it's going to have a big problem. Because I love the argument where people are saying, oh, we need to be more green, so we're going to start throwing around potential carbon credits or carbon taxes, which is hilarious because AI is a massive energy consumer across the board. It's not even close. So you can't live in both of them. You can't say you're for this and that. So it really kind of shows people being, talking at both sides of their mouth when they talk like that. But where I'm getting at is companies are getting ahead of themselves. It's going to pop. It will pop. It's just that typically you don't ever see a bubble pop until quantitative tightening, and we're going into quantitative easing currently. So this will run for a while. If you even look at .com, even when it got real frothy, we ran for a while. So I don't expect that to slow down anytime soon. Now, were the conditions maybe a little different? Of course they were, but I just think that's the comparison.
Yeah. Gosh, what's the saying? I know things look bad now, but believe me, it's going to get a lot worse. You thought it ran already. It can keep running and keep going. Oh, I can only imagine what that would look like and what that would feel like to folks that are on the outside of it. For the people on the inside, I imagine it's ridiculous, life-changing, absolutely just stupid money flowing around. But for the average folks, as they get replaced more and more by it, I could see some very hostile sentiment building.
Oh, mainstream 100%. Yeah, you will. Because it's going to cost people's jobs 100%. And I mean, that's take it too far. I would tell people to watch that interview. I thought it was really good with Rogan and Elon, because Elon's at the forefront of a lot of this, and he still thinks we're living in a simulation. So it's, I mean, you have to sit down and listen to people they talk about. It's pretty scary stuff, but I mean, now you got to get into what's real and what's not real now. Conversations like with,
Yeah. To give you the Agent J here, we gave you the bearish case scenario. Bullish case scenario. AI actually does replace all of us to the degree that universal basic income becomes an actual thing. And then now that we all have stupid money to throw around and we don't have to work, then we just throw that as the ultimate stimulus check into crypto, and then crypto goes to the moon. And then we were here first, so we win big.
There's something behind that. There is, I mean, possibly, but like I said, I think what we're going to still, personally, just to wrap this up, I know we've been going back and forth on that and have gone on a tangent, but what I'll say is this: I think we're going to keep grinding sideways. We could make new highs, we could make new lows, but I think we're going to still be staying in this sideways action. Liquidations are still going to keep happening because that's easy money for the central exchanges. And then eventually, with some of this news coming out with the government, with the new rules that are coming out, regulation, a little more clarity what's happening, that's going to happen. I still expect there to be another rate cut in December. I think there'll be another rate cut. I think we expect it in, what's the next time the Fed is meeting after December? Is it in January or February?
Late January.
Okay, I would expect probably another cut there, both quarter points. Might be getting ahead of myself, but I would expect something like that still to happen. And then you're going to start hearing talks about you're going to start hearing the actual name. You're starting to hear about it a little bit, but the names of who's going to replace Jerome Powell. And I think that could then carry the market further, knowing that whoever that person is, if they are very aggressive or they've been talking aggressively what they're going to do when they get into office, that can then stimulate kind of what the forecasting of People are going to be looking at that coming. And then if talks of quantitative easing start to talk as well, along with that, I think this administration is going to be very aggressive with this. Whether or not it's going to cause more long term, this is going to be bad for all of us. There's no rhyme or reason on this. It's going to be a lot. That's the end game. It's going to be a lot worse because inflation is going to be the big bugaboo that's going to get worse because of these actions that keep happening. But in the short term meaning 2026, I expect this to trickle into 2026 outside bearing a black swan event. And I think we will start to go up. And I think it's going to bring a lot of max pain for certain people because so many people are stuck in that 4-year cycle or still thinking that we're going to go down, which everybody still keeps missing in the crypto industry. Crypto industry doesn't seem to talk much with the macros of TradFi. TradFi is here. TradFi has their tentacles heavily embedded into crypto. Crypto is going to do whatever TradFi wants it to do now. People need to understand that and get over it. That's where we are. And they're going to do whatever is going to allow them to get the most accumulation possible because it is a piece that they're going to leverage, and they're going to start to accumulate as much as they can, whatever that's going to be. If that means more downside pain, so be it. If it's more max pain to the upside, so be it. But I think it's going to be a little bit of that. And I think it's going to be creating an environment where people are going to want to take on more leverage because of perfect example. If you get out here and everything, more rate cuts, everybody's getting super bullish. People are going to be putting on heavy longs. All of a sudden, bam, you're going to get a pullback and they're going to liquidate all the longs. And then maybe we chop sideways again some more. And then we go up to the next level or we go down the next level over the next year. I think it's going to be some kind of shenanigans like that. So what I would recommend, at least what I'm certainly doing, about 25% of my portfolio, I'm going to start trading it. And I'm okay if it takes off. I'm okay because I'm more positioned to the long side. And if it wants to pull back, that's fine. I'll have dry capital to put to orders on these pullbacks, like I did on November 4th. I did put dry capital to back in that I had pulled out originally. And I'm just going to keep playing. We want to keep playing this game. That's fine. I will keep making money while we go either sideways and these downs and ups, and I'm still hedged to the long side. If I'm wrong, then I will feel the pain. But I just think there's more. I think there's more pain to the upside overall. That's my 2 cents on it.
Interesting. I like it. I'm split in the middle with you because the whole sideways action for X amount of time, it makes sense. But at the same time, I am still a 4-year cycle guy to a degree. And look, I'm going to stick to it until I'm proven wrong. But if we are proven wrong, then that means that you were proven right, sir. So there you go. Gosh. Alrighty, folks. Thank you so much for joining us tonight. And by the way, if you want more of this excellent conversation and all those cool exclusive live streams that we've been talking about this whole time, well, you can find them over inside our private Telegram community. If you want to get in there, head on over to the website, walktheblockndf.com, find our membership tab, and that is where you can find our sign-up link for a small nominal fee. We like to say around here, the waters get rough, so don't sail through them alone. Come join us as we navigate digital mentorship together, or come join us as we navigate digital finance together. Private mentorship, exclusive live streams, Q&A. Go from beginner to intermediate to expert with us. When we all work together, we can win together. And believe me, there's plenty of room on this ship for all you guys. Outside of that, yes, exciting week. Government allegedly reopening soon. We got to wait until the actual paperwork gets signed. But outside of that, yep, crypto markets are doing what they do. Sentiment's down for sure. But at the same time, this is a part of the game that we knew that was going to be coming at some point. So I don't think we're super surprised around here, and we hope that no one's getting too shaken out of here. But for those folks that did get shaken, well, sorry, but you might be missing out on the gains. Outside of that, again, folks, thank you so much for joining us. I'm Zenith. This is Tracker. You can catch us in the Telegram, or you can catch the show on the socials. Walk the Block NDF is our tag on Twitter, and then you can also find me at ZenithDI on Twitter. But outside of that, that is all we got for you here tonight. So, ladies and gentlemen, until we catch you guys next time, I hope you all have an excellent evening and continue to have a good week. By the way, happy Veterans Day. That is tomorrow. So shout out to all you guys that were in the armed services. Appreciate your service, and love seeing you guys around here.
Absolutely.
Till we catch you guys next time. Good night, everybody.